Hello everyone, welcome to this video. I'm going to be talking about some questions that I've received over the past 48 hours or so about one particular problem in this week's learning activity. But before I do that, I wanted to let you know this is a perfect example of how we're going to use this news flash area. It's where I can do really quick videos, hopefully, or just touch base with you on a regular basis. So make sure you're watching these videos. They may and hopefully make your life a little bit easier as we go through the course. Now, before I delve into this one particular question, I wanted to let you know a little bit about the homework as well, the learning activities. So as we're doing these learning activities, I'm going to be introducing you to a series of online calculators that make your job so much more easy compared to longhand calculation. Now, if you'll notice that I'll say many places, show your work. Well, how do you show your work when you're just literally keying in a couple of numbers and hitting a button on the internet? Do a screenshot. Do a screenshot of that so I can see where you got the inputs and then the answer. So do that. If you don't know how to screenshot, Google it. It's super easy. And then just take that screenshot and dump it right into your Word document. And that's it. Really. That simple. If you're spending hours and hours on a homework problem, you're probably not using the calculator because we're talking maybe 5 minutes for some of these questions. The hard part is figuring out which one are the inputs that you should be using. But nice thing about the calculator, if it doesn't make sense, you just play around with the inputs and hopefully you have a number that makes sense. You screenshot that and you put it in your Word document. All right. So there's enough on how to do the homework and how to capture your work. Just do a screenshot. All right. So let's talk a little bit about the questions. I was getting some questions about a particular problem, the beta, market beta, corporate beta. That is question 10.6, I believe. Yes, 10.6. So let's take a look at this real quickly. I made some notes this morning. So the question, or actually problem, the problem 10.6 has to do with beta. And it asks you about a corporate beta and a market beta, and that's where a lot of the students' questions were coming in because the book does go over some information in a very complicated format. But let's just break it down. Beta, for our purposes, is basically just a weighted average. A weighted average is a very important little tool to have in your life toolkit, but it is math. But it's an important little toolkit. It's an important concept. It comes up all over the place on weighted average. If you don't know what a weighted average is taking those things that you have and figuring out what percentage that they have in the overall whole. Okay, so let's take a look at, I'll do a couple of them, and then you'll see the pattern, and then you can do the rest. Okay, so let's take a look at especially the question right here. What is the overall corporate beta? Okay, so and then you can look, is it consistent with corporate risk theory? Okay, you can see corporate risk theory addressed in the textbook. If you know that, you can kind of know what the answer to this problem is too, which is kind of cool. But let's just take a look at how to calculate that overall beta, the corporate beta. Okay, now remember, beta, fancy name, makes it sound cool, right, when you say beta. But beta is just a measure of how something responds in comparison to something else. Okay, so in this case, we're talking about a corporate beta. So it's these various projects. Looking here, we got a walk-in clinic, MRI facility, whatever. Okay, how are those performing in comparison to the overall company, the corporation? Now, you may think that when a corporation does good, let's say they're making good money and made fantastic returns in a particular year, that all of the divisions or the projects within that company would do well as well. Well, but would they do equally as well? Would there be some that would be rock stars and some that would be kind of okay? Would some actually lose money when the overall company is doing well? The answer is, yeah, they're all over the place. Not every division or project within a company is going to do equally as well as the whole. Okay, it might just by accident, do as equally well. But let's say the company did a 20%, increase in operating income. Would all of those divisions have a 20% increase? No. Some of them are going to be 5%, some will be a 50%, but overall, the corporation's going to have a performance number, right? So I think that makes sense. We all, you all work for places and, some of them do better than others, departments. Some may actually even go the opposite way. Okay. You could have a project or a department that when the overall corporation does well, it may lose money. And in some cases, that's even by design because the overall leadership of the company knows that if you have a particular project that has a negative beta, okay, operates inversely to your overall corporate beta or your, let's say, corporate performance, let's think of it that way, can help. So when the corporation has a bad year, you could have this division that does really well during the bad years. Now, how could that be? They're usually kind of unique to find these things that actually work inversely. But let me talk about, let me make it really, let me think of something that's, okay, I got one. All right, so here's one that's kind of a really, hopefully simplistic, but let's talk about it. So banking, right? You know about banking. They take deposits, they do loans, they do business loans, that kind of stuff. That's kind of the traditional things that you do. And obviously think about if the economy is growing and the economy is healthy, they're going to be doing more loans, they're going to be doing more deposits, things are going to be great in a lot of areas of the bank. Let's say the bank had a department that dealt with bankruptcies. Maybe they had a bankruptcy consulting service. And by the way, bankruptcies, they cost money. You have to pay money to go through a bankruptcy. You're hiring lawyers and accountants and all kinds of stuff. So to liquidate a business, it's not free. If you're doing, it's not free. There's going to be some cost involved. But let's say the bank had a department that provided consultation services to companies that decided to go bankrupt or liquidate. During the good years, you don't have a lot of companies liquidating. You don't have a lot of companies going bankrupt. But during the bad years, all of a sudden, they're making hay. A lot more people are going bankrupt. And there are companies that do thrive during economic downturns. So, and the bank may say, we want to keep this division because during our bad years, they help make our bad years not so bad. And that's actually called modern portfolio theory, another fancy word. Basically meaning you're going to have different types of projects or divisions or investments that operate in different ways to make the bad times not as bad and to level out the good times, to kind of make your overall returns more even if you can. So that's a little bit about why, or just the kind of the thinking about how these different projects or departments or whatever you want to call them within a company can operate and respond differently than the company as a whole. Okay, so hopefully that makes sense. And that is what corporate beta does. Corporate beta slaps a measurement saying that if the overall corporation is going to respond, with a 20%, let's say return or 20% increase in operating revenue, okay, making money, 20%, the overall company, the walk-in clinic right here, because it has a market beta of 1.5, is actually going to produce, it be expected to produce returns. In that case, let's say the overall company was 20%, it would be 30%. Okay, so it'd be, 50% higher than the overall returns of the company. And like the X-ray lab, okay, the overall corporate beta is a 0.5. So let's say the corporation did 20 as a whole. We would expect X-ray lab to do what? Half of that, right? And that's 10%. So that's where it shows how they all kind of, how they are predicted to work together, or in comparison to the overall corporate beta. Okay, so how do you calculate corporate beta? Well, it's very simple. So don't overthink it, guys. It's just simply a weighted average, like I talked about, 7 minutes ago. Weighted average is one of these things that you want to have in your back pocket, that you know how this concept works, because it comes up all over the place in life. Okay, so weighted average. All we need to do to find out the corporate and market betas is to find out the weighted average. So in the first case, step 1, I'm going to break it down this way. There's 3 or 4 different ways you can skin this cat, but I love cats, but we have 2. There's different ways that you can approach this problem. So this is probably the easiest method, just kind of going from step 1 to step 2. So step 1, take the project, investment, whatever, we're going to call it. It might be called different things, but in this case, we're calling it a project. We have the walk-in clinic. I have to figure out the weight of that walk-in clinic compared to the whole. Okay? Wonderfully, this problem they set it up for us. They gave us this nice chart. So the walk-in clinic amount invested was $500,000. The overall was $5 million. Math already done. I just need to know what the percentage of the walk-in clinic is to the whole. Basic, simple math. 500,000 divided by 5 million equals 0.10, which is 10%. Okay, let's do another one. MRI. That one, amount invested, you can see up here, 2 million. Remember, the total is 5 million, right? So you can kind of, it's going to be almost 50%, right? Well, 2 million divided by 5 million equals 0.4 or 40%. So that's step 1. You want to find out these, I'll call them, don't get freaked out, I'm going to call them percentages, or again, it's the same thing, whether it's a 0.10 or you turn it into a percentage. But you're going to want to find those weights that each one of these investments have. When you add up all of your weights, they should total 1. Okay, just so because you cannot exceed over 100%, because everything was based off of that total value of the amount invested, which was 5 million. Okay, so you're going to do that for each one. I've done the first 2 for you. Okay, so you do the rest. Okay. Then step 2 is the actual weighted average part. Now step 1 was figuring out how much of the weight that was in the company. Now we want to do the weighted average to each one of these betas it talked about, the corporate beta and the market beta. Beautiful thing about this problem is we have the corporate betas already established for each one of these projects. And we already have the market betas already listed here. Okay? So it's really simple from this point. You're going to take for the corporate beta, let's do that one. You're going to take the percentage, again, leave it in a decimal point, times the corporate beta, because we're going to do corporate beta first. Okay? Look them up on the chart. Okay, so we've got, I know the walk-in clinic is 10%, corporate beta is 1.5. I'm going to multiply those together. I'm going to get a number. I'm going to write that number down. Then I'm going to go to the next step and do the next project, which in this case we did the MRI. I know that's 40% or 0.4 times the corporate beta already given to me. I'm going to do that math. I'm going to write it down. I'm going to do the other 2 projects. I'm going to write those numbers down. The product that I get from each one of those numbers. I'm going to have 4 numbers when I'm done with that, right? I'm going to add those numbers together. So when those numbers added together, they're going to equal a magical number for you. So take a look at that number, and I'll give you a hint. Actually, I'll give you more than a hint. When we add up all of the corporate betas, okay, there's individual ones, to come up with the total corporate beta, those 4 numbers I just talked about, it should equal 1, which would be consistent with corporate risk theory. Okay, that the risks of the components, and the components are these various projects, when added together, equal the risk of the whole. Hopefully I've said that right. But yes, when you add them together, they should all that, and it should be 1. So check yourself. If you're not getting 1, you may want to go back and look. Market beta, you won't have a magical pretty number like that, but like the corporate beta of 1. But you still want to go through that same procedure. You're going to take the weight of the project. Again, the walk-in clinic was 10%, times the market beta. Okay, there's the value given to us. Come up with a number, write it down, go to the next one. MRI, 40% times market beta 0.5, get a number, write it down. Do that for all 4, add them together, bingo. You have your market beta. Okay, so hopefully that helps with this particular problem. What I try to do with the videos that are in the presentations, I try to match them up to problems that you'll be facing at the end of in the learning activities. So make sure you watch those as well. Some of them are straight out walkthroughs, but with different numbers. Okay. And then I also show how to use the calculator. Use the calculator. I always there's only about 10% of students who probably didn't watch the videos and do things longhand. And I'm like, wow, that probably took 3.5 hours to do versus maybe 30 minutes. So use the calculators. In this course, I don't really want to, I want to introduce you just to the formulas through the textbook and then move on, because no one in real world uses the formulas. No one enjoys using the formulas. So use the calculators. We've got all kinds of cool calculators that we'll use that will make your life a lot simpler. But having a basic understanding of, yeah, I know there's a formula behind that. If I needed it, I could get it, but I'm going to use the calculators. So, and screenshot that work and put it in your homework, in your learning activities, and you'll be golden. All right. Okay, guys, normally these videos would be a little bit shorter, but I wanted to walk through that problem because I know I had a good group of you reach out to me saying that this was a little bit of an issue, and I know that the textbook doesn't really do a great job. All right, so I hope this has helped, and I will see you later. Thanks.